Good morning, San Antonio. My name is Caleb Janasek. I'm an audit manager here with ADKF, and today I'm with Stephen Cole, a tax manager, and we're here today to talk to you about tax planning. So the first question I have, as someone who doesn't know a lot about it, Stephen, what is tax planning?
Well, thank you for sitting with me today, Caleb.
No problem.
Tax planning is creating tax efficiency
Okay.
or minimizing tax for our clients by analyzing their financial situation.
Okay. So Stephen, how do you plan a client's taxes? What goes into that?
We have to be involved with the client. There's no substituting that. We get to know them, get to know their business, their goals, and we help them achieve that.
Okay.
What we do is we look at their life, their unique situation. We rely on our knowledge of tax code and we match areas that they can benefit from to their unique situation. Our slogan, "With you all the way," truly embodies the tax planning process, being with our clients each step of the way.
So Stephen, what are the ins and outs of tax planning?
I like to look at tax planning under three headings: income, deductions, and tax credits. This simple approach allows us to easily communicate with clients.
Okay.
Today, in part one, we will be discussing the income.
So Stephen, what falls under the income category?
There are many factors to be considered when looking at the income category.
Okay.
Typically, it makes sense to defer income to future tax periods, but there are scenarios where accelerating income to the current tax period is more tax efficient.
Okay. So what are some techniques for deferring income?
There are many techniques we use to defer income. Two I work with frequently are 1031 exchanges and installment sales. Without getting into the nuts and bolts of either, an installment sale is any sale where at least one payment is received in a future tax period.
Okay.
Now, this might happen just by the nature of how the contract is written, but in some cases, contracts are written specifically to achieve this tax outcome.
Okay.
A 1031 exchange is a complicated transaction that requires funds being held with an intermediary, selecting specific replacement property, and fulfilling certain time requirements. But ultimately allows a taxpayer to ultimately swap their property tax-free while deferring taxes.
So you mentioned accelerating income. Why would you want to accelerate income?
Very good question, Caleb. There are various reasons why we may want to accelerate income. It could be as simple as taking the benefit of having a lower tax bracket this year versus next year. Imagine the unlikely scenario where tax rates are set to double next year. We may want to accelerate income recognition as much as allowable into this year rather than being taxed at the higher rate next year.
Makes sense.
A unique scenario that makes sense for accelerating income recognition is an 83B election.
So what is an 83B election?
The 83B election is an election that allows the employee or founder of a company to sell restricted stock at today's market value versus the future increased market value.
Okay.
This is beneficial because the fair market value is likely lower on restricted stock today versus in the future.
Right.
This, however, can be detrimental if the stock value was to decline or if the company went bankrupt, as taxes would have been paid that no share benefit would be received.
Okay.
This is one of those elections that exemplifies why it is so important to speak to us, your CPAs, early and often. This election has to be made within 1 month of being granted those shares.
Well, I think that's good knowledge to have right there. So Stephen, is there anything else you want to discuss regarding income recognition?
Well, as we've discussed before, there are numerous considerations around income recognition. We discussed deferring income. We discussed accelerating income. There are other quirky elections out there that fall into neither category.
Right.
A 1202 exclusion allows a wonderful opportunity For qualified small business companies or startups, the stock of those companies to be sold virtually tax-free, subject to certain caps. This is one of many different opportunities we look for while serving our clients.
Gotcha. Well, I think this has been very beneficial for the public, Stephen. Thank you for your time and your knowledge, and hope you have a wonderful day and enjoy England.
Thank you.
All right.